Today, I'm going to tell you why 2023 is going to be the year of brick and mortar bank closures.
Closures with 7 local branches impacted this time. U.S. Bank says more customers are shifting to online banking.
Wells Fargo Bank near you may be closing soon. The company announced plans today to close 800 of its branches by 2020. The company says Americans are relying more on mobile and online banking.
Comerica Bank announcing it is closing another 16 branches after already closing 40 more before this.
Why does anyone have to physically go to the bank anymore?
The only reason I ever go to is if I have cash to deposit, really.
Really just pull out cash.
Fact. Today you can make mobile deposits, get cash from ATMs, and even apply for loans online.
Good. So here's a question. How long will your neighborhood bank branch be there? Last year, Wells Fargo closed 221 branches. That's more than any other bank. This branch did reopen, but is no longer open on Saturdays. Bank of America shut down this branch in Brisbane, leaving the small city south of San Francisco without any bank.
The reason for this is the credit expansion during the pandemic is now over. Now it's credit contraction. So the demand for loans is going down. So banks are no longer going to be wanting to lend money to people. The reason for this is the asset prices are falling. So the prices of cars are falling, and banks don't want to be involved in assets that are going down in prices. So the price of houses, a bank's not going to want to make a loan for $400,000 for a house and then see that the house falls to $350,000 and the buyer goes and bails on the house. Brick and mortar stores, they cost too much. The real estate's expensive. The leases would cost too much, and it's not competitive with the online offerings. So, for example, the Bank of America and Wells Fargo, their savings account are offering 0.01 and 0.02%. And one of them, if you have over 100,000, it goes to 0.02. If it's less than 100,000, it's 0.01. And yet you can go to multiple online savings accounts and get over 3%, like so easy. So not competitive. And we all know what happens to companies that aren't competitive. They go out of business or they have to change. Also, the labor rates that they pay in the U.S. are really high. So when you have to hire somebody with all of the regulations, with the FDIC insurance, the Social Security, all that stuff that's taken out of the paycheck, the employer pays half of that. So, and you've got the cost of wages has been going up in many cities, and so it makes it less competitive when you have an online bank that's staffed with people from India or the Philippines, call centers that are just doing that all day, and somebody's watching over and making sure they do so many calls a day, versus an employee that sits at a bank that sometimes may go take a break. They may take 10, 15, 20 minutes for a customer, typing slowly on the computer. You can't have somebody that's getting paid, $20 an hour, working that slowly when you've got somebody who's working for, let's say, $5 an hour in the Philippines or India, just doing call after call, 5 minutes, 6 minutes, and handling those problems much quicker. So it's going to be better for customers if they can get their, the issues solved quicker. The labor shortages and the demands of employees, now saying, I want to work from home, I want to do this, I want to do that. That makes it more, and that makes it easier for the bank to say, okay, let's just close this branch and do the stuff overseas, or you can work from home, but you can work from home, and so can the people from India and the Philippines and so on. If you were to start a bank, Andy Grove, the guy, I think it's Andy Grove from Intel, he had a philosophy. If you were to drop somebody who's brand new into a business and said, would you start this business today? And the question is, if you were to drop a smart person into the retail brick and mortar bank, would they start the business today? And I think the answer is no, they wouldn't start it, because it's not competitive and it's not the future. So that's another reason. Banks are a tech product. Like everything else, they can be disrupted by technology, and we're seeing it now with alternatives like Bitcoin, which they're not a replacement for banks yet, but you can see that technology is disrupting many different areas, and banks, retail banks, they have to change. They can't just sit still. You know that Netflix used to offer DVDs, and they had a streaming service. And what happened is they decided the streaming was the future. So what they did was they started a streaming business. And of course, that was very controversial at the time because they were making a lot of money on DVD rentals. They started the streaming business, and they were making less money at it than the DVD business. So a lot of people were like, you're cannibalizing your own business. This is stupid. Why are you doing that? Well, banks are basically doing the opposite of that. They're saying, the way retail banks are working is they're saying, we're making money in some of the banks. We're not going to open streaming. We're not going to go online because that's not as profitable for us. And we're going to have to compete against these other guys more. And we don't want to do that. So what they're doing is they basically have two businesses, but they're operating with one price structure. So they have Chase, Bank of America, Wells Fargo. They all have online websites. You could do your banking online, or you could do it in the branch. But they're charging you the same high rate that you would get in the branch. There's no incentive for you to go online and do your banking when they give you no incentive, no pricing incentive. The only banks that offer the good rates are the online only banks. The brick and mortar banks, all of their online savings, their checking, it's lousy. So, I could list pretty much every one. US Bank, Bank of America, Wells Fargo, you name it. If they have a branch office more than just two or three, then they're probably going to have lousy rates. So, like I was saying, I looked up, I think it was Chase or Bank of America. Most of them, for their savings account, which is usually the highest for online, usually those are, in the last month or so, most of those are over 3% now. With, I think, Chase and Bank of America's 0.01%. So with interest rates going up now, this is the time people are like, hey, my money's getting eaten by inflation. I better move to a higher rate. People are going to naturally start looking around this year for higher rates. And when they see how lousy the brick and mortar rates are, they're going to be going online. So I have a whole list of companies in the video that I'm sure a lot of people are familiar with, some videos. Blockbuster Video, that was basically a tech product. So as soon as streaming became more popular, those DVDs were not needed anymore. And the physical location of the bank is not needed anymore. The same other companies that weren't competitive, Kmart, they just weren't competitive with the others. Sears, Fry's Electronics was basically like before Newegg and Amazon. Fry's was the place you would get all your electronic stuff, and they had a poor online presence and they didn't adapt, and now they're out of business.
Attention Kmart shoppers, Kmart is getting ready to shut down another store. And if you're thinking,
it's the end of the road for this Kmart in New Jersey that will close permanently this week. Afterward, only 3 Kmarts will remain in the United States.
A Blockbuster visit used to be part of everyone's weekend routine until Redbox, Netflix, and internet streaming came along. Now, Blockbuster is closing another 300 stores.
Well, it is the end of an era. One of the last big brick and mortar electronics stores here in the U.S. is closing its doors for good.
So if you look at the brick and mortar stores today, they're basically like the newsrooms after all the downsizing. So brick and mortar stores today, they have a nice building, but when you get inside, it's like a hollow shell. They're empty desk. Most of you may find one person sitting at a desk. Almost all the other ones are empty. And it's been that way before the pandemic. These layoffs have been going on for a long time now because there's no demand. There's not demand for loan officers and other people when you can do it online. The biggest benefit that the bank provides is the ATM machine. It's not the inside of the bank. It's not the employees so much. They're sort of a last resort, and a lot of that stuff now can be done online. Young customers, the growth for banks, they're doing everything online and they're using mobile banking. They're not going into the branch. They're not talking to people in the branches. That's their growth, and they're not there. So it's going to be a dying business, just like the television market. So that's just some of my thoughts today on banks. The thing that sort of drives me crazy is that the dual business model that they have, but yet the pricing, they don't give you any of the pricing of an online bank, and I just don't think that'll last. It's not their resources are still pretty good. When you look at the largest banks, I think it's still Chase, it's still the retail banks, but I don't think that's going to continue forever. So I think this year is going to be the year that sort of changes, and we see the rise of the assets in online banks versus the brick and mortar banks. And so, when you see all these retail banks, it's sort of crazy to think of how many of these sort of obsolete businesses are still in business. And I'm just thinking they can't last forever. Every other business where customers have scratched their head and they see the Kmart or the Sears or the Bed Bath & Beyond, and they think, what is that doing there? I don't go there anymore. I can do this online. And that's what I think of when I see bank buildings. Is I think, wow, that's really kind of a waste of resources and labor, So anyways, that's my video for today. If you liked the video, give me a thumbs up or subscribe. Thank you.